Good morning, guys. I want to do a quick video on when to take profits on your stocks and when you kind of know that you are the stock is gonna pull back on you, or the likelihood that the stock is gonna definitely pull back on you. So like and subscribe to this channel and this video. Join the Patreon, the Mo's Muscles tier right in the middle, $25 right now. It's gonna go up from here. We're talking trading all day. I make short videos. You ask me your individual stock questions, and it's everything chart trading. So let's get to this one. So what I'm specifically talking about and how you know that your stock is going to kind of change in direction on you is what's called a gap up or a gap down. So this is Intel right here. This is a few days ago, and we're going to look at this gap right here between the two prices, between 54 and 57.50. So the stock price jumps up on you one morning, or one morning. So you jump up about $3 and you think, okay, now this thing is really going to go for a run. Okay, of course it can go for a run for a few days, but as I've talked about in my other videos, there's no support level in this region right here. So again, we're not creating those patterns to kind of zigzag our way up. So that leaves no support. When you get a stock that gaps up like this, you need to take some profits right here. More times than not, this thing is going to come right back down to the previous area. Whenever I see a stock gap up on me, I'm taking profits that morning. And if it keeps going up like it did here, sure, I'm still in the stock, but I only took my profits off the table. I left maybe at a minimum, my initial investment. So this is how you can put some money in your pocket, let things settle down over time, come back to where there's a support line, and hopefully your stock kind of zigzags up and down from there. Now, same thing can happen when you're going short. I haven't talked much about shorts yet, but it's the same thing. When you get a gap down like this, there's really no reason to panic. There's no M formations in here. There's no support lines going on in the other direction. So as you can see, Intel, it took a little bit of time, maybe a month, but it did eventually get back to that level. These gaps in up or down are always a good time to take some profits. So if you were short on this, take some profits right here. The likelihood of it staying here is not very good. If you were long on Intel and it gapped up on you, the likelihood of it staying up here is not very good. My biggest thing to say is, when we're trading, we want to keep money and keep putting it in our pocket. It's not like an investment where we're sitting there and going to be waiting for a year or two, collecting dividends and whatnot. Our goal is to make money and put it in our pocket. So when you're trading, when you see these gap ups or gap downs, depending on if you're long or short in a stock, go ahead and take some profits off the table, let it come back to you, then reinvest that money and maybe a little bit more, because you'll have an even better setup. So that's what the video that I wanted to make for you today. Go ahead and like and subscribe, join the Patreon. I'll teach you guys all about this if you have more questions. Also, if you have any questions, comment below, and I'll be happy to answer those too. Have a great day.